What's happening? Live. And we are almost ready to roll. Almost ready. All right, so who do we have? All right, let's get started, everyone. Good evening. Let's move this over a little bit. Right about there. All right, who do we have tonight? We have Alyssa, Winston's daddy, Logan, Nick, Betty, Saheed, Marion, DeWitt, Derek, Jean, Heyman, Victoria, Has Squared, okay. Bianca, good evening. Who do we have over here? Over here, Rogue Man, Terry, Nick, DeWitt, Rob, EK, Trader Kev, Paul Johnson, Christine, June, Neil, Dr. Stacy, good evening, Doctor, Fads, Henry, Christine, what tickers do you recommend for 1% weekly return? Christine, ask me that in a few minutes. I'm just saying hello to everyone. Fifu, what's going on? Zachary, Johns, Cuban Eddie, Christine, Anthony, Neil, Jesse, Jay, Joey. All right, good evening, everyone. My name is James, like I said. Up, Down is here, and Beast is here. Beast is in the house. Carmen's in the house also. Dr. Nice, thank you. All right, so my name's James. This is Dividend Stock Talk, where we're looking for a simple, safe, predictable, and consistent 1% per week using pre-qualified dividend stocks, and those are companies that are consistently profitable for at least 2 decades. That's 20 years. 20 years. What are we doing? All right, sorry, I just got to get my camera ready. Well, I should say this camera ready. There we go. All right. Being said, so you guys are going to give me some stocks to take a look at. We're going to find something new and interesting. I'm going to show you the trading strategy that I created for my 9-year-old daughter. Money and Dan. Oh, Moneyland Dan. Oh, good evening, Moneyland Dan. Susan, Neil, Games Sound, Pfizer. First one on the list today is going to be Pfizer, PFE. Alrighty. PFE. Okay, PFE. We got a new computer today, so it might be a little bit easier, but the funny thing is I don't have everything set up for it. Game and Sound is going to take a look at Pfizer in a minute. I Am Legend, AT&T, we'll get to that in a minute. Eric, well, first on the list is going to be Pfizer. Now, anytime I look at any stock, I'm looking for 5 things right off the top. Number 1, the high of the year. Number 2, the low of the year. Number 3, where was it a year ago? Number 4, where is it today? And number 5, where is the motion? Where is the activity? Where is the stock going next? Now, by looking at what it's done this week, last week, the week before, we get a good idea of where it's going next. So, simply put, up, down, up, down. Okay. Not quite the greatest thing in the world. And why are we looking at XRP? There's the reason right there. Okay, so wrong one. Now let's look at Pfizer, PFE. There we go. That looks a little different, doesn't it? Okay. High, low, was, is. Look at this. Down, up. Okay, it's going up right now. Looks pretty good. But is that enough to entice us to put our money at risk? Well, let's find out. It's currently selling at $26.50, $26.50, $26.50, $26.50. So the going rate at this moment in time is $26.50. Santa, Elvin, what's going on? BB, how are you? Diego. Yep, old school. Yeah, I get it. Thank you. Okay. So let's look at the last 90 days or the last 3 months. Get us a better idea Yo, what's good? How you doing, Santa? Okay, so the last 90 days just has this thing going up, down, up. So here's the bottom here, 24.80. Now she's at 26.80. That's only $2. Well, $2 on a $24 stock, well, that is over 10, 12, somewhat 12, 13% from here to here. Look at the last 30 days. Last 30 days gives us a good idea of where do we think it's going next. What do you think? The last 30 days. Here's the bottom. It just goes up over 15, well, from 24.80 to 26.80 is $2. That is over 12%. So do you keep it? Do you jump in? Are you okay with a 12% rise? And do you think it's going to keep going up? Well, it kind of leans towards how do you like the stock? Do you like it or do you not like it? Okay, because we have 5 simple rules here. Rule number 1 is never buy something you do not want to own long term. Or if you don't understand it, you don't buy it. That's rule number 1. Rule number 2 is never sell at a loss. It kind of defeats the purpose of the whole game. Rule number 3, make sure the company's consistently profitable. That's kind of like a no-brainer. Why would you put money in a company that's not consistently profitable? Alex, I see you. I see you over there. Eric, we'll take a look at Mara in a bit. Rule number 4, weekly options only. Quickly, look at this. 30 January, this Friday. 6 February, next Friday. 13 February, 2 Fridays out. 20 February, 3 Fridays out. 4 Fridays, 5 Fridays, so on and so forth. Every single Friday there's an option that's going to expire. Rule 4, weekly options only. I'm looking for weekly cash flow. I have no desire to change what I'm doing. It works perfectly fine for me. Okay, some of you people call us Gen Xers. We were brought up in the 60s and 70s. We're a very strange bunch. If it ain't broke, don't fix it. If it's working fine, just leave it alone. It's working fine. Leave it alone. Call in. Thank you for that. Would anyone advise investing in Robco right now? Jacob, I have no idea what that is, and you got to give me the ticker symbol. But I only like companies that have 2 decades of consistent profits. I've never heard of that company. So, rule number 5, make sure all the numbers work. And what do I mean by all the numbers? Well, you're going to understand quickly. You ready? What am I buying it for? $26.50. What's the current strike price? Now, when I say strike price, I mean if I'm buying it, I want to be able to turn around and sell it to someone else the very same day. I want my profit right now. See, I'm weird. I'm a 100% American. We're strange. We're a strange bunch. I want it now, and I want my profit now. That's what I want. Now, unfortunately, the profit that I'm looking for is only 1%. Most people, that's not enough. Well, I'm terribly sorry. If 1% a week is not enough for you, you're in the wrong place. Because I'm not looking for anything more than 1 or 2%. Simply, safely, predictably, consistently, every single week. That's what I'm looking for. That's what I'm teaching. If that's not enough for you, you're definitely in the wrong place. Okay? That being said, let's move on. Okay, so a covered call. I want to know exactly what I'm making. What am I paying for it? What am I selling it for? What am I making? What am I walking away with? Am I reaching my goal? Is it a simple, safe 1%? Well, beyond that, number 1, do I like the company? Great. Number 2, is the chart telling me it's the right time to buy? Number 3, do the numbers work? If so, let's do a trade. Now, I do the covered calls only because they're simple, they're safe, they're predictable. Most companies I look at have been consistently profitable for at least 2 decades. If you got a pen and paper, you might want to jot down a few notes. Okay, the companies that I like, very simple. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and anything on old Warren's list. Okay, it's very simple to find them. Just go to Google. In the Google search, you put in Dividend Kings list 2026. And within a couple of seconds, there's a whole bunch of companies just dying to give you the information. Okay? So that being said, I'm not 100% warm, fuzzy, cozy with Pfizer only because she's at a 30-day high. And I don't buy at a 30-day high. Okay? When I grew up, it was said over and over and over again. You want to make money in the stock market, you buy low and you sell high. Buy low was 30 days ago. Sell high is today. So as much as I like Pfizer, I'm going to write it down for 2 weeks from today. Because normally, okay, if you've been paying attention and if you watch and if this is really interesting to you, if you like the company, you jot it down. And then you also write down, well, how long do I think it's going to take for the profit taking to be done? Stocks go up, profit taking goes up, profit taking goes up, profit taking up, profit taking. Now she's up. Profit taking's coming next. It's going to come down here, I'd say in about a week or two. So I'm going to write Pfizer down for 2 weeks from today in my little book. PFE. We got a nice list so far. Nice list working on it so far. All right, that being said, next on the list was, what was the next one? I like your perspective. Thank you. Game and Sound, you're welcome. Eric wants to take a look at Mara. I thought there was another one here somewhere. Another one here somewhere. All right, we just did Pfizer. Okay, I Am Legend wants to take a look at AT&T. Now, just to let you know, I did buy some AT&T yesterday because it just looked good. Now, was I surprised what happened with AT&T today? Did you see what happened to AT&T today? We talked about it this morning. I said, you sure? Because it looks like it might go down some more. And it actually did. But I'm in the same boat that you are. Because I bought it also, and yes, it went down. I really don't mind. They've been around for over 100 years. I got my 1% out of it. I feel like Robco and West Tech are good. Okay, Jacob, I don't buy new companies. I don't do tech company unless the company is over 20. It's 2 decades. 20 years old and is consistently profitable. I don't even want to look at it. Okay, it may be the greatest thing since sliced bread. I really don't care. My main objective, consistency of profitability and weekly options. And I want 2 decades. 2 decades is 20 years. Okay, there's 10,816 different companies to choose from. So why would I pick a company that I don't know and specifically don't know if they have 2 decades of profits? Okay, so you can do whatever you want with your own money. And I suggest everybody do your own research. Find out what works for you. Okay, when do you want to retire? What do you want the money for? How much risk do you want to take? Does it make sense? That should be the number 1 question. Does it make sense? Question number 2 should be, do I like this company? Okay, so AT&T, let's check it out. Now, I did buy some. Yep, I was surprised. Anyway, here we go. The high, the low, where was it? Where is it? Look at this, up, down. That was a simple one, wasn't it? But here's the thing about AT&T. They've been around for over 100 years, and we all know who they are. $23 is the current price. The 23 is going for 51. That is more than 2% if you like AT&T. But look at the issue that we're having at the moment. Let's look at the last 3 months, the last 90 days. Okay, top, bottom, is, up, down, up, down, up, down. Okay, I jumped in right there. And then I was surprised with Friday, Monday, and Tuesday. It is what it is. But I'm okay. Don't worry about me. I'm perfectly fine holding on to it because I got over 2% on my AT&T. As a matter of fact, I like it so much, we're going to do it again right now just to show you, even though it's at the low of the year, okay, you cannot get any lower than the low of the year, and that was today. But guess what? It could go lower tomorrow. So, do you buy tomorrow, or do you wait and see if this is the bottom, she's turning around and going up? We won't know until tomorrow. But let's take a look at the numbers anyway, just in case. Okay, so we'll be looking at the 23. There it is right there. All right. Let's change this. I want to change it. There we go. To a market order. Market order. And then confirm and send. And here's the order right here. Sorry about that. Buy one covered call AT&T. 30 January, which is this coming Friday. The $23 call option. Well, the stock at the moment, it's at $23.13 after hours. Okay, so after hours trading, it's $23.13. But tomorrow, the numbers might be different. But the interesting thing is the math never changes. The equation, you just plug in the numbers. What's the price at the moment? The price at the moment, $23.13. Okay, I'm going to buy it first thing in the morning. I'm going to turn around and I'm going to sell somebody the right, not the obligation, the right to buy it from me. It's called a covered call, a buy right. There are literally hundreds of videos online telling you the pros and cons of the buy right or the covered call, whatever you want to call it. But I'm going to buy the stock first thing in the morning, this price. I'm going to turn around and sell it for this price. In that way, I'm going to collect up that little bit of money. This is what it's going to cost me. What is my rate of return? Because that's what we're looking for. We want to know if I'm putting my money up, what am I getting back for it? So let's find out. The only way to figure that out, we need a calculator, unless you can do it in your head. Calculator. Okay, here we go. Profit, 41 bucks. Now remember when I said simple, safe, predictable? When I say predictable, it means I already know what my profit's going to be before I even do anything. Now most people buy a stock and then they wait to see, does it go up, does it go down, what should I do? Well, here I really don't care where it goes, kinda. Okay, I say kinda because she is dropping at the bottom and maybe she'll turn around and go back up again. I don't mind owning it at 23. But here's the thing. I want to buy it at 23 and then I want to sell somebody the rights to buy it from me at the exact same price I just paid for it. My profit is what I'm looking for is this right here, the $41 option premium. The stock doesn't have to move at all. It can stay exactly where it is. If it goes up, I make my money. If it stays exactly where it is, I make my money. If it comes down, if it goes down, I'm a little wishy-washy on that because I still get my money, but I still keep the stock and then I can turn around and sell it again. So hypothetically, if the stock is 23 above come Friday, Monday I'll have all my money back plus my profits. If the stock is below 23, let's say it's $22.99, I keep the profit that I made and I keep the stock and then I turn around and sell it to someone else next week. But keeping in mind, never sell it for less than when I paid for it, the $23.13. Even though I'm trying to sell it for 23 to collect the premium is what I'm after. Okay, I'm not after the dividend, although it's nice to get one, but that's not what I'm looking for. Because stocks have a tendency to go up just before the dividend is paid. And when they do, I want to set my trading up to take advantage of that situation. So jump in, do a covered call, I get a simple, safe, predictable 1 to 2% every single week. And that works for me. All right, chat. No questions yet. All righty. All right, so 41 divided by the cost of the trade, including commissions and fees, that's $22.59. Well, that's my profit and that's my investment. Well, what's my rate of return? You take the 41, the profit, you divide it by the outlay, the cash, and that gives you your rate of return. So for 3 days, because remember, Monday's already gone, Tuesday's already gone, we got 3 days left. Now, normally, I won't do an option play for this week with only 3 days left. I might jump in and look to next week to get a little bit higher, go for a week and a half. But every Friday, let's see what it looks like. We're going to take the profit, we're going to divide it by the investment, $22.59. Gives me 1.8 for 3 days. 3 days, Wednesday, Thursday, Friday. Because whoever buys this option, okay, they have the right to buy it from me anytime they want. That's the interesting thing with American options. American options, you can exercise them anytime you want. So don't be surprised if you buy a stock, sell the option, and then the very next day it's gone. Because whoever bought that option, it is their right, and that's all they'll want. They want the ability, if the stock jumps, to exercise that option and take advantage of that move. Okay, I really don't care if it jumps up. I don't, seriously. I want it to stay the same or I want it to go up. Now, it goes 3 different ways, up, down, or nowhere. So 2 out of 3 ain't bad, just like Meatloaf would say, because 2 out of 3 ain't. So I like 1.81. We're going to save this one, put it in our little collection of interesting trades for the week. 1.8. 1.8. All right. Guys, got to dig deep. Find me something else. Eric, we're going to look at Mara next. 1.8. Here we go. And there it is. Okay. Buy one covered call, AT&T. 30 January. That's this coming Friday. The $23 call option. Look at it. It's down to $23.08 now. $41 is my profit. $22.59 is the outlay. That's how much money I got to put up front. Because you think you can get a rate of return without putting something up? Doesn't work that way. You have to put something up. Put your money where your mouth is. You heard that before. You make an investment. Well, this investment is paying me $41 or 1.8% for 1 week. Hey, it's Tony Hawk. You started trading now. Oh, yeah. Thank you there, Sir Ryan. Very nice of you. Anyway, so 1.8. I'm going to save this one. $1.8. We're going to go over here. A new one. 1.8. Nicely done. 1.8. Okay. Eric wanted to take a look at Mara next. Mara. All right, let's get rid of this one. Let's get out of that. Get out of that. Go back to here, and let's put in Mara. M-A-R-A. All right, quickly take a look at the numbers. 3 to 4 seconds. Ready? High, low, was, is, down, up, down, up, down. Uh-oh. What's going on right here? Let's zoom into that. What do you think? Take a look. Up, down, down. It's actually coming down right now. Now, I do own some Mara, and yeah, I'm not 100% happy about it, but I'm not panicking because I like rule number 1. Never buy something you don't want to hold on to. So, Eric, for me, I already own it, but I wouldn't jump. Me personally, I wouldn't jump in at the moment. I'd wait for it to turn around, which could be today. Let's zoom in a little closer, Eric. I'll show you that. Okay? Today has a higher high, a higher bottom. So this yesterday could be the bottom. Could be. I like 2 days to the upside, so I want to see what happens tomorrow and then see what happens on Thursday. Because it might be a buy for Friday. Let's go next. Next. Colin, thank you for that. Colin made a killing on Rich Tech Robotics and Redwire. Cool beans. Do you only sell covered calls? Biz? No, I do other things also. But that's the only thing I'm giving away tonight. Colin and Astra, what's happening, brother? Colin, insane. 40% gains and 40% gains. Nicely done, Colin. Victoria, how are you? T Daddy Mac. Okay. Do you like the stock? Does it make sense? Absolutely. Kind of makes sense. Thank you there, Colin. Uh-oh. Don't. Oh, where did I leave off? I like your perspective. Thank you. Game and Sounds, thank you. Game and Sounds, 1% of all your capital. Absolutely. Tessie, Sonic, Colin, I think he likes dividends. Yes, I do. Eric, UNH, find the bottom. Let's check it out. UNH, UNH. United Health Group. Ouch. Now, Eric, it's not a bad thing. Look what happened. That's not bad. It depends on how you look at it. Here's the top. Here's the bottom. Here's where it was. Here's where it is. Look at this. Down, up, down, sideways, down, up, sideways, big drop. What happened right there? What happened today? Now, I have no idea why it did that. Here's your last 90. Okay? Down, up, down, up, down, up. Big drop. That's a big drop from 350 down to 282. Okay? That's a big drop. Over 10%. So, what was it? Before you jump to conclusion, look at down here, all this blue. That's volume. That's the average volume right there. Look what happened today, way up here. The volume's normally down here, but today, way up here. That is like 5 to 8 times the amount of volume, normal volume. So what's up with that? Who knows why that did that? Because I don't pay attention to it. It's not on my list. Fresh, dividends are the secret to wealth. Thank you, Fresh. Daddy Boss, thank you. Thoughts on Vail? Let's take a look at Vail. So before we leave UNH, this right there. Now it's a, look for the bounce or the dip, whatever you want to call it. They call it the dead cat bounce. Boom, and then she shoots back up again, hypothetically speaking. Now keep an eye on tomorrow morning. So if she opens up higher tomorrow morning, means she's going to go back up. But if it was really bad news, she may open and go down tomorrow morning. So it depends. With a big drop like that, gaps have a tendency to fill. That is going to go up eventually. So I'm going to write UNH for next week. All right, what do we have next? Vail. Sean wants to take a look at Vail. Isn't Vail a monthly? No, it's not, and it's a no. Who came up with that one? Sean, I talked about this before. I don't buy anything at the high of the year. High is not time for me to buy. Sorry. It's going to be a no for this week. What do we have? Joe Lex, what's going on? Fernand. La 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 la. Okay. Alex, I've been hurting with Mara for close to 7 weeks now. Alex, how can you be hurting with Mara? Mara, depending on how you play it, you should be doing just fine. Depending on where you got it, of course. Okay? Up, down, up, down, up, down, up, down, up, down, up, down, up. Depending on where you jumped in and how you're playing it. Okay, Alex? Boston guy, how are you? Adam Hudsell, style for sure. Eric Haney, I've made money off of Mara 3 times in the past 2 months. Nicely done. Josh Davis wants to take a look at Hormel, HRL, Hormel. Wait a second. Okay, Hormel. The high, the low, where was it? Where is it? Look at this. Sideways, down, up, down, up. Nice movement right here. Let's zoom on into it. Before we do, hold that thought. 25.20. The 25 is going for 30. Look at this. I'm going to say no to Hormel, and this is why. Look, 0, 0, 0, 0. If you're wrong, if the stock goes down, 1 strikeout, you get 0. 2 strikes out, 0, 0, 0. Yeah, no thanks. If there's no money to support the wrong decision, well, that's going to be a no right off the bat, even though Hormel is a dividend king. I wish I met you before. I lost big on United Health today. Sorry about that, dude. Sorry, Mike. Harry, Daniel, Eric, that 3 weeks would include this week if it continues the way it's going. Nicely done. Mike, where do you buy, sell Schwab, Robinhood, other? Okay, Mike, my accounts on Robinhood, and I have accounts on Thinkorswim, which is through Charles Schwab. Fresh, you have a website. Fresh, top right-hand corner, top left-hand corner of your screen. There's a little picture of me right there, the 10-Minute-Trader. That's what my website is. K-Van, AT&T has earnings. All right. All right. We got some questions. Let's grab a seat and answer some of these questions. Grab a seat, answer some questions. Okay, so K-Van says AT&T has earnings coming up. Okay. Boston Guy, what are you using on your screen? A stylus. Eric, yes, they do, before the market opens in the morning. All right. How do we get that view? You got to go buy one of those screens. That's how you get that view. Boston Guy, all right. Jonathan, how's it going there, Jonathan? Uh-oh. All right, there it is. Nope. All right. AT&T is announcing earnings tomorrow. I've seen positive earnings stock go down. Oh, Jeff, thank you for that. Tough Guy wants to take a look at Disney. All right, hold that thought for a second. John, do you ever use a stop loss? Never. Never, John, because rule number 1, never buy something you do not want to own long term. Stocks go up, stocks go down. It's just part of the game. You're going to buy something, it's going to drop. You're also going to buy something, it's going to shoot through the roof. It's a 50-50 balance, John. I like to take a look at the chart. When the chart tells me it's going up, that's when I want to jump in. Stock tells me it's going to go down, I want to stay away from it. I like predictability and simplicity, John. Tom Jankowski. Okay, do you think it's a good time to buy Google? I don't buy Google because they only started paying dividends 3 years ago. So they only have like 3 years of dividends. All right, Tough Guy wants to take a look at Disney. So let's take a look at Disney. D-I-S. Interesting, but Disney got a little bit of a pullback. Check this out. Okay, here's the top, here's the bottom, here's where it was, here's where it is. Down, up, down, up, down. It's coming down at the moment. If you really like Disney, okay, here's your top. She bottomed out, shot up, now she's dropping again. You really like it, wait for it to bottom out and turn around. It's not telling you, it's just making an observation. Okay, it's dropping. Wait for the bottom for it to turn around, go back up again. T dividends, wealth secret, blah, 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 blah. Lower lows, lower highs. Yep, downtrend. Got it. Ford is melting up. Oh, Ben. Ford. Interesting. All right, well, let's zoom into Ford. Let's take a gander. Top, bottom, where was it? Where is it? Down, up, down, up, down, up. What's going on right there? 1394. The 14s are going for 11. As much as I like Ford, I'm going to say no, because apparently the market maker has changed and they're not giving good premiums anymore. Okay, somebody wants to take a look at Salt. Never even heard of it. S-A-L-T. Salfi Textiles. No options. No, thank you. Sorry, dude. S-O-L-T. S-O-L-T. Oh, yeah. Solana ETF. No, ain't happening either. Too high, Hormel. Got it. TSLL. For God we love. TSLL. TSLL. Interesting. But TSLL is in a little bit of a downturn. Okay, take a gander. Okay, the top, the bottom, where was it? Where is it? Down, up, down. It's dropping at the moment. So what makes TSLL so wonderful? Here's the top, here's the bottom. She dropped, back up, back down, back up, back down. It's in a downward trend. Wait for the bottom to show up. I do have some TSL in case you were curious. DGNX. Wilbur. DGNX. What is that, Wilbur? DGNX. Diginex Limited. Hell no. I don't do monthlies. Sorry. Tom Jankowski. I don't do Google. The dividends have only been 3 years. No. TMC. Isn't that metal company? TMC. Yep, the metal company. Interesting. That's interesting. No publicly concessions, but just in case it can be given for free with arrangement policy, DB safety. Well, alrighty then. I have no idea what that means, but all right. All right. Okay, Helene, the stock is TMC, the metals company. Some comments on live have been filtered. Yep. Dr. Corey wants to take a look at Boeing. Ooh, Boeing. Well, let's look at TMC for a little bit. The top, the bottom. Where was it? Where is it? Look at this. Up, down, up, down, up, down. What's going on right here? Okay, I had a little bit of an issue with companies that were $1 a year ago. It's $1 a year ago, now we're at $8. What gives? Can it be consistently profitable with only a year of increasing from $1? $1, now it's at 8. Let's look at the numbers. 30 days ago. That's not a buy at the moment. Look at it. The high, the low, where was it? Where is it? Look at this. Up, down. It went from $6 to 10. 6 to 10 is a $4 increase. Okay, that is 20, 40, 60. That's a 60% increase from here to here. Now it's having a pullback. Of course it is. What goes up? Profit taken. People say thank you. Do you normally take profits on Fridays? I take profits whenever I can get them, but normally on Fridays, you're right. TSL looks great on their options, but currently on the downtrend. Look at it next week. I'm going to agree with him. What about SPY? Are you kidding me? Somebody always asks me about that. Yahoo Finance. We're going to check out SPY, Yahoo Finance. So, SPY. Why do you like SPY so much? Who came up with that one? SPY. Now, why is this so bright? I thought this was on the other computer. Yeah. On the other computer. Yeah, because I just switched out computers and this one's kind of blinding. Oh, where is it? I don't see it. Display resolution, nope. Display orientation, nope. No, where is it? Dark mode. Dark mode. Come on. There we go. That works. That's much better. Not getting blinded. All right, historical data. And we want to take a look at SPY. Who came up with SPY? I can't even see. There it is right there. DB. Okay. All righty. State Street Spiders 500 ETF Trust, SPY. Currently trading at $6.95. What I want to look at is historical prices, dividends only, and then I want to look at all the dividends, maximum amount. I want to go back 2 decades. Now, the reason I want to go back 2 decades, that's 20 years. 10, 20 years of consistent profits. So, hypothetically speaking, if SPY is consistently profitable, this number here, the dividend, will get higher and higher and higher every single year. That is consistently profitable. That means however much money they made in 2016, they made more money in 2017. They made more in 2018, 2019, every single year, higher and higher and higher dividends. That's, in my opinion, the definition of consistently profitable. So let's go all the way back to 2016. No, 2006. That will be 20 years. And here it is right there. Right here. Okay? 2006. The dividend was 51.9. 51.9 in 2006, the very first dividend. So each year it should get higher and higher. Let's check it out. You ready? Higher, 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 lower. Higher, 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 lower. Higher, 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 lower. Higher, 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 lower, lower, lower. Do you see the pattern here? Not consistently profitable at all. And to make matters worse, yep, it does get worse. Check this out. We're going to take a look at the summary. The summary right here. Whoops, let's go all the way over here so you can see me better. The summary right there. We're going to check that out. And what is the summary for the S&P, the SPY? What does it look like? Well, here we go. You ready? Here's the numbers. Okay, this is the number I want you to pay attention to right here. The yield. Okay, do you understand what the yield means? The yield, you take all the profits, add it all together, and you divide it by the purchase price. That gives you your rate of return, or your yield. And guess what SPY paid last year? 1.07 for the year. Now, I'm trying to show you how to get 1% every single week, but you're telling me you want to put your money into SPY and get 1% every year. Would it be okay if I disagreed with you? Because in my opinion, 50% is a heck of a lot better than 1%. But what do I know? Paige is not responding. Okay. Let's get back to where we were. So, if you don't mind, I'm going to politely say no to SPY. It's a little chilly tonight. I got 3 shirts on. Can you believe that? Liz? 1. All right, 1, 2, 3. That's how cold it is. Yes, and I'm in Florida. I'm in Florida and I'm cold. All right. So no to SPY. Dr. Corey wants to take a look at Boeing. B-A-C-A-T-I-O-N. In the summer sun. Okay. The high. I'm going to say no right off the bat. Now, the reason I'm saying no right off the bat is the high was just 2 days ago. Why would I want, see, I like to buy low and sell high, not the other way around. So, sorry, Doc, no to BA. Tom wants to take a look at AB. What is AB? All right, hold on. I'm missing some of these questions. I already said no to Google. We already look at TMC. What app do you use to see the charts? That is, Christina, the app this here, that is Thinkorswim, and it's offered through Charles Schwab. All you do is dividend stocks? Yeah, Tom, terribly sorry about that. Tom, I've done a lot of things in my days. Okay, Tom, I'm 62, okay? I've already been retired, which means whatever money I create is what I have to live on. That's it. I have no desire to go back to work. Okay, my first job was in 1974, Old Man Simmons Farm, 1973, 74, somewhere in that area. Gets a little foggy when you think that far back. Anyway, 5 decades, Tom. I worked 5 decades. I think I'm entitled to retire. But being retired, you got 2 choices, and only 2. 1, you take responsibility for your own money and you learn how to invest it yourself. Or 2, here you go, you do it. Give it to someone else, let them do it for you. But you don't get the same returns. I've been holding Disney for 5 years. It's been sideways all 5 years. Well, Alex, you've been here long enough. You've heard me. I said over and over again, stocks go up, they go down, they go up, they go down. Okay, as it's going up, take the profits. When the profits are high enough, take them, let it come back down again. Because the funny thing is, people just like me and some of you in the audience, when it goes from 180 to 250, it's like, yeah, I'll take my profits, thank you. Pick up all your marbles and go to the next sandbox. Same thing. It's not a profit until you take it. And guess what? What goes up must come down. Same thing here. Went up, now it's going to come back down again. I'm going to put Disney on the list for 2 weeks from today. Because I think that baby... No, I'm going to put it on the list for 2 weeks. Give it some time to retrace. Yes, I am actually that old where I write stuff down. Why don't you just put in the computer? Yeah, no. I've had so many computers crash on me. I write stuff down. Guess what? There could be a blackout. There could be no internet. There could be, a whole bunch of things. But guess what ain't going to disappear? The book that I wrote down on. Okay. What stock did you just jumped in? BA is Boeing. All right, what else do we have? Don't. AB. Tom wants to take a look at AB. AB. Alliance Bernstein. No. How's that, Tom? I don't do monthlies. February, March, April, July, those are months of the year. No, thank you. Rule number 4, weekly options only. Now, these are my rules. Okay, this is just for me. Okay, tough guy, what stocks do you recommend? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and anything on Warren's list. It's not that difficult to find them. Up running PCS. You like SoFi. S-O-F-I. I got a minor issue with SoFi. Would you like to know what it is? Let's put it in right here. S-O-F-I. Let's take a look at the summary for SoFi and see what they're offering. Because it only makes sense, right? Anytime you consider a stock, you should consider, are they profitable? If so, how long did it take them to get to consistent profitability? Why isn't this thing popping up? And how long have they been in business? These should be some very important questions. What else do we have here? So up and running as that opens up. Why isn't that opening up? All right, we're just going to skip that one. Anyway, SoFi is coming down. Look at it. It's a no for me because they're not consistently profitable. I don't even think they have dividends, so I don't do SoFi. Up and running, SoFi, no. DGNX, didn't we look at DGNX already? DGNX, yeah. I don't do monthlies. Okay, February, March, April, July. I don't do monthlies. No. Rule 4, no monthlies. Weekly only. What else do we have? He's not watching this chat. Absolutely, Frank. I can't watch that chat and all the other ones at the same time. Frank, I apologize. I apologize every single night. Okay, I'm streaming on, well, not tonight. Tonight it's only 1, 2, 3, 4, 5, 6. Tonight it's only 6 streams. I'm usually 9, but I got a new computer, which means I didn't put all the passcodes from the restreaming, so I can't use it tonight. So I'm not streaming on YouTube, you know, the big screen. So sorry, Frank. All right, Wilbur. What do you mean by you don't do monthlies? Wilbur, you ready? March, April, February, March, April, July. Those are months of the year. Okay? That means I can only trade an option once per month, 12 times a year. So if I'm getting 1 to 2% with each option trade that I do, that's only 12 to 24% at the end of the year. Okay? That might be okay for you. But if I'm getting 1 to 2% with each trade that I do, weekly options, that would be 50 to 100% per year. So I'm going to lean towards the 100% per year and not the 12% per year, 12 to 24. But you do whatever you think is right. I just don't do monthlies because they're a pain in the butt. Okay, how do you project where the stock's going to be in 30 days? Hold on, I'll give you a quick little example. Not that one. Okay, take a look at this one, Macy's. Here's the top, here's the bottom. Okay, it dropped, now she's turning around, going up again. Now, by the way this chart looks, it looks by the next 5 days, it should be somewhere up in this area, between 21 and 21.50. Okay, and it has weekly options. 30 January, this Friday. 6 February, next Friday. 13 February, 3 Fridays away. 4 Fridays away, 5 Fridays away, 6 Fridays away. Every single week there's an option that trades. Now, I can easily depict where it's going to be in 5 days because it came down, turns around, now she's going to go back up again. That part's easy. Now let's take a look at a monthly. Okay, this is a monthly. February, March, June, September, December, January 27, January 28. Okay, monthly. This is what it's doing. Let's take a look at the last 30 days. Okay, here's the last 30 days. Up, down, up, down, up, down, up, down, up. Great. Now tell me, where's it going to be in 30 days from now? Not that easy, right? Well, let's make things worse. The current price, $60.92. The closest strike price is going to be the 61. They don't have a 61. So let's look at the 60. The 60 is paying $1.30. But if I sell it, if I buy it $60.92 and I sell it at 60, I'm losing 92 cents. So I'm only actually walking away with 42 cents per share on a $60 stock. That's not even 1%. Battery's low. Low battery. I got a low battery. Okay, so I don't do monthlies because number one, it's challenging to figure out where they're going to go next. And two, the amount of money they're offering is usually not enough. So I stay away from them like the plague. I don't like monthlies. They just don't pay enough. Wilbur, he doesn't do calls that offer only monthly options. Thank you, Alex. Weeklies, yep. Do you usually roll out in the money covered calls to next week? Okay, user 22554412855522. Why couldn't your parents just name you Tim or Ted? I call you Ted, all right? So, Ted, do you usually roll out in the money call options to the next week? I take a look at them. Do they make sense? What I'm looking for specifically, Ted, what did I buy? What did I buy it for? How much did I pay for it? What did I sell against it? Where is it at now? Where does it look like it's going? And what is the best, safest, and most predictable move should I do? Should I move it into next week? Should I let it get called away? Should I let it expire? Should I double down and get some more? I ask those questions every single day, and it takes me a fraction of a second to figure it out. What did I buy it for? What did I sell? What did I make? Where's it going? What should I do? It doesn't take that long to figure it out. So every day I ask that exact same question. Next. Uh-oh, Hewlett Packard looks pretty good for next week. Thanks, Eric. Let's take a look. HPE. HPE. It does look interesting. Check that out. The top, the bottom, where was it? Where is it? Look at this. Down, up, down, up, down, up. 2160. The 2150s are going for 36, and that's only 3 days away. That looks like a winner. So let's check it out. Well, number one, do we know who Hewlett Packard is? It's a silly question. We all should know who Hewlett Packard is. Here's the thing. It's offering me more than 1% for 3 days, which is, tomorrow, Thursday, Friday. Okay, fine. Let's get rid of February 24th. Last 30 days. Okay, what do you think? Check this out. 30 days ago. The high, the low, where was it? Where is it? Look at this. Down, sideways, down, up. Okay, 30-day high, 30-day bottom. Okay, now she's going up. I'm writing that one down also. All right, so let's do Hewlett Packard. Let's get rid of this. Let's go to covered call. Let's do the 2150s. One contract, there, market, there, and here's Johnny. Buy one covered call, Hewlett Packard. 30 January, that's this coming Friday. The 2150 call option. $30 is the is the profit, 2100 is the investment. Now that's $30 per contract, and it's only 2100. So you could creating a healthcare. Okay, hold on. We're gonna do these questions next. I'm gonna do this one, then we're gonna take more questions. All right. So let's find out, is this profitable or not? If so, how profitable is it? Clear that. $30 is the profit for one contract. Divided by 2120 comes to a grand total of 1.4%. 1.4%, we checked it out yesterday. It's 68% for the end of the year, 1.4. I like 1.4. So we're going to save this one. Going to save it because it looks good. Hewlett Packard. Let's do it, Hewlett Packard. Hewlett Packard style. Where are we? Where are we? Come on. There it is. There we go. Hewlett Packard. One contract. 30 January. That's this coming Friday. The 2150. Look at the stock price is 2148. Stock price is 2148. I'm going to buy it at 2148. Sell the 2150s. I'm going to make a $30 profit. It's going to cost me $2,100 for one contract. That's 1.4% for 3 days. The questions, all the same. Does it make sense? Do I like Hewlett Packard? Do I like Hewlett Packard at this current price? Is this someplace where I think my money could be safe? These are questions only you can answer. So, I'm going to save this one. Put it right there. $1.4. Nicely done. 1.4. Hewlett Packard. Nice pickup there, Eric. Let's get back to the beginning. Let's answer some questions. Questions. Gotta get the seat ready. What do we got? He's not explaining what he does with the weeklies. Oh, hold on a second. What is this? Pinned comments. Okay. All right. Okay, it's going down. How long? Oh, wait a second. I'm missing all these questions. Okay. Uh-oh, we got some questions. What do we have? I'm sure you looked at SoFi multiple times this week. Can you check it for me? Didn't we already say no to SoFi? Pretty sure I did. All right, wait for that to reload. Wilbur, BITF. Wilbur, what is BITF? BITF. Bit Farms Limited. I'm going to say no. Wilbur, the reason I'm saying no to this, it was $1, less than $1 a year ago. I don't see any way possible that thing could have 2 decades of increased profits. Not at $1. COPX. John Altria, MO. I'm going to say no to Altria. Okay, I don't buy anything at the high. Okay, it's a high. No, thank you. COPX. COPX. Hell no. 2 reasons. Reason 1. Who came up with that one? Skankopotamus Rex. Interesting name. I don't buy anything at the high, number 1. And number 2, I don't do monthlies. Sorry. Dave Frybird. Is there a guarantee 1% per week anybody would do it? There's only 3 guarantees in life, Dale. And I bet you know 2 of them. You probably don't know the 3rd one. Wilbur, only weeklies. That's gambling with a strategy, not investing. What's your edge? All right, Wilbur, my edge is specifically, stocks have a tendency to increase in value just before the EX date. The EX date gives you an idea when the stock is going to when it's going to pay its dividend. Just before it pays its dividend, stock has a tendency to go up. So by knowing when the stock is going to move, a simple, safe, predictable trading strategy can jump in, jump out within 5 days to get a 1% return. Only on companies that have at least 2 decades of profits. That's over 300 different companies we look at. I like copper for the long call. Good for you. Wilbur, weeklies are for momentum scalps, not holds. If you're holding overnight, you're praying. Wilbur, I'm not holding overnight. I'm buying the stock with the intention of holding it long term, as long as it has a weekly dividend. A weekly option. If it has a weekly option and it stays consistent and it consistently gives me 1% every single week, I will hold it as long as it continues to give me money. Once it stops giving me money, Wilbur, bye-bye, see you later, and then I pick up one that will. Rust free. Thank you there, Rust Belt. Dale, So know if it's going down and know if it's going up. Dale, that makes no sense. How long have you been returning 50% annualized? About 15 years. Passport Eric. Wilbur, thanks for taking the time to do an example. You're welcome, Wilbur. Ted, do you negotiate the commissions with your broker? You're a frequent shopper. Yes, Ted, I'm aware of that. I do get a discount on my margin money. What is the strategy? Simon is called dividend capturing 2.0. How do you feel about ETF? It would depend on which one, Nick. Time to delete. He likes the name Ted. French Bulldog. He's not explaining what he does with the weeklies. Simon, I actually showed you 3 trades that were actually decent. And what you do with the weekly option is I sell the weekly option. It expires on Friday. If the person who bought the option wants to exercise it, that is a them scenario. I got my money. I buy the stock, I sell the option. If somebody exercises that option, great, let them take the stock. If they don't exercise the option, great, I keep the money and I find someone next week and sell another one. It's like a revolving door. Okay, you throw the stock into the revolving door, it goes round and round and round, and every single week it spits out money. That's what I'm looking for. Wilbur, give us one of your stocks to our $100 in option calls tomorrow. Wilbur, I know absolutely nothing about you, and it would be, let me think. I'm trying to think for the exact terminology, Wilbur, for me to give you something for you to do tomorrow. Okay, I don't give advice, number one. Okay, I don't give tips, I don't give advice. I make observations. If you have a stock you want me to take a look at, I will take a look at it and I will show you the strategy that I use. If it just so happens to work, fine. Oh, you know what, Wilbur? I'll do you a favor. Here you go. Okay. All right, Wilbur, who's this one? Simon and Wilbur, this one's for you, okay? This is Macy's. Here's the top, here's the bottom, here's where it was, here's where it is. Down, sideways, up, down, up. 21.38. The 2050s are going for 29. That's more than 1%. Okay? It's under $100, more than 1%. Let's check it out. Okay, pretty clear to see. Here's the top. She drops. Yesterday was the bottom. Today's up. A higher high, a higher low. That's an up day. The 2050 is going for 29 cents. Let's work through it and see what it looks like. Okay, first thing I want to do is change that to covered stock. Right there. The 2050 is right there. Here's the order right there. I want to do just one contract at the market. There we go. And confirm and send. Here we go. Are you ready, Simon? Are you ready, Wilbur? Here we go. Buy one covered call, Macy's. 30 January. No, this is not a tip. This is not advice. This is just showing that it is possible to get a trade that will make money between now and Friday. Okay? The $20.50 call option against the Macy's stock, $44 is the profit, $2,000 is the investment. What's the rate of return? Are you ready? The rate of return. Get up a calculator. You take the profit, $44. You divide it by the investment, $2,006 for one contract. Try it one more time. Make sure the numbers are right. 44 divided 2,006, 2.1%. Now, Simon, for you, I'm going to explain what you do with the weekly option. Okay? I buy the stock, 100 shares of the stock, 100 shares of the stock is going to cost me $2,000. All right? Once I buy it first thing in the morning at 9:30 a.m., at 9:31 a.m., I sell somebody the right to buy it from me for the exact same price I just paid for it. If I'm paying $23.38, I'm going to sell it for $20.50. I'm going to collect $44 just for the contract. $44. Now, come Friday, if the stock is $20.50, I will get all my money back. I'll get to keep the profit. I don't do anything with the option because I don't buy the option, I sell it. So once you sell the option, that's the other person's responsibility to do something or not do something. That's up to them. So whether or not they buy it to do something with it, that's a them thing. Okay, if it's above $20.50 by Friday, I get all my money back on Monday. If it's below $20.50 on Friday, the option expires worthless. I keep my stocks, and then on Monday I sell somebody else the option, and I keep the stock, and I do it every single week until my target is hit. Rule number 1, never buy something you don't want to own. Rule number 2, never sell at a loss. So if I buy it at $20.38, my target is going to be $20.50. Every single week, I will sell an option at $20.50 until it hits my target and I get all my money back. Until then, no. So hopefully that made sense. Hopefully that made sense. Wilbur, back to number 1, baby. Okay. Eric Haney, sorry you're not number 1 anymore. All right. Wilbur, you'll need more than 100 for a quality covered call. Yeah. Number 3 is pretty good. Just got the number 3 view about. Okay. Wilbur Levitt, you're the buddy. Okay, whatever. Bolt. Wilbur, what the heck is Bolt? Let's find out. Let's get rid of that. Back to that. Back over to here. And let's put in Bolt. What the heck is Bolt? B-O-L-T. Bolt Biotherapeutics. Never heard of it. Okay, who came up with that one? Wilbur. Come on, man. No options, no thank you. No options, no thank you. Remember, rule number 4, weekly options only. C-Train. Taxes. C-Train, let me see if I can explain it to a manner which you'll understand. Are you ready? If you are worried about paying taxes on a 50% gain, that kind of equates to asking what the gas mileage is on a Rolls Royce if you actually go in to buy one. Go into a Rolls Royce dealer. What kind of gas mileage does it get? If you have to ask that question, you can't afford it. If you're worried about taxes, you shouldn't do this. Okay, if a 50% or more rate of return scares you and you think you can pay more taxes, well, more money comes more taxes, if that's what you want to do. There are ways of not paying taxes legally if you want to do that. Okay, which means you got to put some effort into it. Rust Belt, INSW. What the hell is that? INSW. International Seaways. No, I don't do monthly. February, March, June, September, December. Those are months. I don't do monthlies. TXO, never heard of it. TXO Partners. Again, I don't do monthlies. Okay, a monthly, you can only trade it once a month. No, thank you. Simon, are you only write before the div, the ex-div, so you can't get 1% weekly? I have no idea what that means, Simon, but write it again, but pay attention to what you're writing. Are you said only right before EX div so you can't get 1% weekly? I have no idea what that means. Can you explain it in a different manner? Wilbur, Bolt doesn't make any sense. Yeah, but when do you buy the stock? Uh-oh. All right. So Simon, the sample I just gave you, okay? The Macy's sample I just gave you. If I'm going to buy it, I'm going to buy it first thing in the morning, as soon as the market opens. So I can put my order in before the market opens, or I can wait for the market to open to find out what the numbers are going to be. Then I just plug the numbers in. What am I buying it for? What am I selling? What am I collecting? Is it more than 1%? It's either a yes or a no. Well, number one is never buy a company you don't want to own. If you don't like the company, next. It's that simple. If you don't like it, you don't understand it, next. There's over 10,800 different companies available. You don't like it, next. That's it. Next, next. Okay, it's not buy a covered call, it's sell a covered call. Nope, Simon, it's buy a covered call. Are you ready? All right, are you ready? Here we go, Simon. Stock prices, option prices. Strike prices, expiration dates. Okay? Bid, ask. Bid is when you're selling, ask is when you're buying. Okay? So, if it's a covered call, you're buying the stock, selling the option. You ready? You take your little cursor. You see the cursor right there? What I want you to do is I want you to pay attention to this right here. As a matter of fact, I'll make it easy for you. All right, right there. You ready, Simon? Give it a second. I'm going to blow it up so you can see it. Here it is right there. You see that little, whoops. You see what that says right there? It says buy. Okay, you're buying the stock, selling the option. That's buying a covered call. Over here would be selling a covered call. Let me explain to you the difference. Okay, Simon, are you ready? It says buy right there, so I'm going to click on that right there. This down here pops up. I am buying 1,000 shares. I am selling 10 contracts. Okay? So when you buy a covered call, you buy the stock, you sell the option. When you're selling a covered call, you sell the stock, you buy the option. It's not what I want to do. I want to buy the stock and sell the option. It's safer. By owning the stock, I qualify to get the dividend. Okay, by selling the option, I collect the premium. I'm not sell. It is what it is. Okay, the little ticker right there will tell you buy. Buy the stock, sell the option. That's a covered call. Or you could do it separately. By doing it separately, you buy the stock first, and then you sell a call option against it. That's two different orders. One order, buy a covered call. Buy the stock, sell the option. Two orders, buy the stock, sell the option. It's still the exact same thing. You're still buying the stock, you're still selling the option. However you want to look at it. What is that stock I just jumped in? UNH. We'll take a look at that. We already looked at UNH, Johnny. All righty. DJG, VIG. What is VIG? That makes no sense to me. VIG. Isn't that the interest you pay on a loan to a loan shark? VIG, the VIG. Hell no. I don't buy at the high, number one, and it's a monthly, number two. No, who came up with that one? Sorry, DJ. Johnny, 20% drop. Yep, I see it. Example, management given a free Wi-Fi, anything could happen, blah, 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 blah. Okay, Helene, what stock is that? Don't know. We already passed that one. Oh, Colin. Trump creating healthcare and also United Healthcare, first revenue drop in a long time. Cool beans. All right, what else we have over here? Nephilim. When you own the stock, you sell a covered call. Other people buy it. Absolutely. Freckled Frex. Freckles Frex. Okay. Is an expense ratio of 0.68 too high for a long-term investment, AIX? Okay, Freckle Frex. I appreciate the question. Nothing to do with what I'm doing. Okay, my idea of long-term, first you got to define what you mean by long-term. My idea of long-term is 30 days. Okay, an expense ratio 0.68, that's something you have to figure out on your own. Okay, is that too much money? Is that enough money? Is that not enough money? Okay, because the investment count, whoever's doing the investment for you has to be paid for it. So 0.68, I don't know. And it depends on how you define long term. What is their past performance? Does that make sense to you? Simon, what if the price tanks? Simon, I hate to be the bearer of bad news because someone has been misinforming you. Okay? Watch. Up, down, 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 up. Most likely it's going to come down again. Simon, that's all they do. They go up, they go down. That's it. Okay, stocks go up and then they come down. Stocks always go down. But here's the funny thing, Simon. Okay, if I bought this VIG at 224 and you bought it at 170, who gets the higher dividend? Neither one of us. Because whether you bought it at 170 and I bought it at 224, whatever the dividend is, we get the exact same. And guess what? If you have 100 shares at 170 and I have 100 shares at 224, we both have one contract. So it depends on what you're looking at. How many contracts do I own? If I buy 10 contracts at 224, I can sell 10 options. If you buy 10,000 shares at 170, you can sell 10 contracts. So it depends on what you're looking at. Are you looking at the value of the stock as it goes up and down, or are you looking at the rate of return from the investment that you make directly related to how many contracts you have? It all depends on what you're looking at. So do I worry about the stock price tanking? No, not at all. Because I own a stock that continues to increase its dividends, which means that profits get higher and higher every year. The stock price goes up and down all the time. I really don't care. My concern is the company profitable? Do they have weekly options? Can I take those weekly options and create some kind of cash flow while I am collecting the dividends? So it all depends on what you're looking for. Okay, I'm 62. I have to make money with the money that I've had through my working life. And it's not as much as you think. However much money you think I have, I don't. But I do have enough where 1% satisfies all my bills. Hopefully that made sense. Time to delete. Are you still in IBM? Dude, I got rid of IBM months ago. Another question. Week 1, price of Macy's goes down 5%. I'm holding the stock. Where was it? His question just disappeared. Okay. Another question. Week 1, the price of Macy's goes down 5%. I'm holding the stock and the call expired. Yeah? Well, let's go back to Macy's. So, hypothetically, you're saying if you buy it tomorrow, 2038, and you sell the 2050s, you pick up 29 cents, which is over 2% for the 1 week. Okay, fine. Now, if the stock drops 5%, okay, 5% is $1. On $20 stock, 5% is $1. Okay, so now it's at 1950. All right, so what's next week's 20s going for? Okay? Because if it drops 5%, that would be $19.50. Okay, well, next week's 2050, because remember, I still own it at 2038. Okay, so next week's 2050s are still going for 51 cents, which is still over 2%. If I go 2 strikes out of the money, that's paying 32 cents. That's still over 1%. If I go 3 strikes out of the money, I'm making 11 cents, which is a 0.5%. A 0.5% every single week is still 26% for the end of the year. And I still collect the dividends as long as I own the stock. I continue to collect dividends, which continue to increase year after year. Okay, is that starting to make sense? I'm not looking for the stock price to go up or down. I'm looking for the company to be consistently profitable. And I'm not valuing the price of the stock, I'm valuing the amount of option contracts that I can sell. Because I'm an option seller, I'm not an option buyer. 80% of all options expire worthless. So why would I want to buy them? I don't. I sell them. And 80% expire worthless, that works in my favor. What's the strike I write week 2 call? It depends on, Simon, it's always going to depend on what did you buy it for? What strike did you sell? Where's it going? What option strategy makes the most sense for the next week? Because it's the same question week after week after week. Okay, what did I buy? Okay, well, if you buy Macy's at 23.38, that number is never, ever, ever going to change. So as of today, 23.38, guess what? 10 years from today, what did you buy Macy's at? 20.38. That number never changes unless you dollar cost average or you sell, one or the other. And with a weekly optionable stock, I can sell an option every single week. That's what weekly cash flow looks like. Next question. Holy cow, it's 10:45. Nephilim, Rust, Belt, Hobby, the dividends are not weekly. The premiums, the covered calls are weekly. Nephilim, thank you for that awesome answer. Freaking right on the money. Option buyers in general lose money 94% of the time. Thank you, Ted. You're absolutely right. I'm not an option buyer. I'm an option seller. Okay. Double Top wants to take a look at Verizon and Cisco. Verizon is VZ. It's hard to tell with Verizon. Okay. But check it out. Here's the top. It drops 1, 2, 3, 4, 5 days up. Now it's starting to pull back. Verizon, sorry. Cisco, CSCO. What's going on right there? What do you think? 30 days ago, 77, drops down 73, jumps to 76, drops to 73, now it's at 78. That's a $5 increase. What is that? 8%? That got profit, look at gap up, that got profit taken written all over it. For Cisco, if you really like it. Nephilim, yes, but he explained it's one order, so it's a buy, a covered call. Thank you, Simon. Jeremy, can you start over? I just got here. Yeah, I could start over, Jeremy, but I'm not going to. I got 12 minutes left and I'm done for the day. Nephilim, it's 2 orders. Buy the stock, sell the option. Absolutely. So Nephilim and Simon. Okay, when you're doing a covered call, you can do it in one step, buying a covered call, buy stock, sell option, all in one swoop, or you can do it in 2 steps. Buy the stock, sell the option. It's either going to be one trade or it's going to be 2 trades, but it's still the same at the end. You bought the stock, you sold the option. If you want to individualize them, that's a you thing. Sold by Allie. Good evening, Miss Allie. James, did you lose a tooth? No, Alex, I'm going in for, what do you call it? Implants. Okay. I'm at that point in my life where they just keep dropping out, so they keep cracking. So I'm going for implants, so they yanked out 10. Now we're waiting for them to heal up before I go back to Texas and get the implants put in. So it's one of those things. Bro, thank you for that, bro. James, what's the next taco trade? James, you got to make it more clear. I'm not 100% sure what it is you're looking for. How do you... Okay, wait. I can't, you're talking too fast. Who's got noise in the background over here? All right. Thank you for that. So noise. I thought you were asking a question, but it sounded like news. All right. Sorry about that. Taco trades. James, got to explain what taco trades. I bought TMC options YOLO. YOLO. Okay. I'm not 100% sure what YOLO means, but okay. But we'll take a look at TMC. Isn't that Taiwan Semiconductor? Wait a minute. The metals company. Yep. The metals company, TMC. We already looked at that one a little while ago, didn't we? Okay, here's the metals company. The bottom, the top. Yeah, it's coming down at the moment, depending on what you like. How do you sell options? Is it like covered calls? Kinda. Okay. Len, I'm L3N. Is that Len? All right, Len. Depending on how you want to do it. Okay, you can just sell options by themselves, but you need to have cash behind them in order to do that. All right, and sometimes that's called a cash secured call or cash secured put, which means if you're going to do that, you got to put some money up front. So it's a little bit more complicated than what we're talking about, but still. I bought TMC. Okay, I'm running up. Good beans. Gambo. Thank you there, James. Thank you for being patient. Appreciate the strategy. You're right, Simon. Odom. Odom wants to take a look at Harley Davidson, HOG. Now, I'm waiting on Harley Davidson. I already own some, but it's dropping. We actually have a new bottom today. We had a bottom last week. She went up, pulled back. Now we have a new bottom today. So Harley Davidson, if you really like it, just wait a little bit. Once it finds its bottom and turns around, I like 2 days to the upside before I jump in. Len, how do you sell options? You just click on it and hit sell. Nephilim, I don't know. Oh, I didn't know you could do it in one trade. That's cool. Yep. Passport Eric, buying a covered call is one step. Yes, it is. Okay, but always pay attention. Hold on. Always pay attention and read it out loud. Okay? So, Nephilim. All right, Nephilim, are you ready? When it's a covered call, when that's the trading strategy, the strategy covered call. Okay? Here's the buy, here's the sell. So, if I do a buy, I'm on this end right here. See the little tiny box opens up, says buy. Okay? Now, come down the bottom here. It says I am buying 1,000 shares of stock. I am selling 10 contracts against those stocks. Okay? That is buying a covered call. Now, selling a covered call is the exact opposite. Okay? I am selling 1,000 shares and I am buying 10 contracts, which is backwards. Because if you sell something you don't own, you got to put money up front. And if you buy the option, well, you got a risk of 80% of the options always expires worthless. So always read what you're doing. So hit the confirm and send. And what does it say? Sell 10 covered calls, Harley Davidson, which means I'm buying the $20 call option and I am selling the shares. Okay, so always read it out loud and listen to what the order is telling you. So are you buying the stock first and then selling the option for someone to buy it from you, that is buying a covered call. When you're selling the shares and buying the option, that's buying a covered call. There's a difference between that. That's selling a covered call. So always read it out loud. It'll tell you exactly what it is. Next question. Uh-oh, we got 5 minutes left. Let's answer some questions. What do we got? What do we got? Okay. Hey, it's Twisted Pasta. All right. Where are we? All right. Harley Davidson, OMG, blah, 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 blah. Twisted Pasta, buy right. You are buying the stock, selling the option. Absolutely, Twisted Pasta. Frank Animal, what's going on? Yep, called the buy right. Riley, checking in. How you doing? Been listening, been learning. Nicely done. Next step is to send me your phone number and I'll give you a call. By the way, I don't do emails, I don't do texts. You want to have a conversation? Drop your phone number or go to the website and book a call. And I can guarantee you, I promise not to try to sell you anything. All right? I'll just answer questions. Can you do it in Fidelity? You can do it on any trading platform. Who's that? Passport Eric. Lemonade! Josh Brown from CNBC says only 30% of options expire worthless. Like I said, it depends on who you listen to. What do we have here? Investment capital, interception, ROI, entry. I have no idea what that means. Frank, how you doing? Helene, you're welcome. Frank, what's the best way for me to invest $20,000 I just came into, in your opinion? Frank, if you want to give me if you want to drop your phone number, I will give you a call and I'll chat with you. Okay, this might not be right for you. Okay, this is slow, this is boring, it's the same stocks over and over and over again. Mike, is Fidelity expensive compared to Schwab or Robinhood? I don't know. I don't trade on Fidelity. I don't know. I use Robinhood. Can you explain vertical spreads? Yes, I can, but not right here. Can we take a look at Tootsie Roll? Michael Kelly, Tootsie Roll. Let's find out. Tootsie Roll. Let's delete this. Let's go back to here. Let's go here. I remember when Tootsie Roll first became a dividend king. And by the way, no. Who came up with Tootsie Roll? Michael Kelly. I don't do monthlies. See, those are months of the year. I don't do monthlies. Sorry. So anyway, Frank, as I was saying, drop your number. I'll give you a buzz. Busy this week in dental clinic. Oh, next week. Okay. Cool beans. Uh-oh. I remember I was supposed to call someone back. Damn it. I called someone. Micron. Nick, you want to take a look at Micron? M-U. Micron. Hell no. Hell no. Nick, I don't buy at the high. Look at this. That's the high of the year, brother. What do you think it's going to do? You think just because you buy, it's going to keep going up? I don't buy at the high. Sorry. But is the best way to earn money through stocks, dividends, or selling options? Okay, Len, I know absolutely nothing about you, so I can't really answer that question. Because it's going to come back down to what's your goals, what's your risk factors, how much you have available, how much time and effort do you want to put in? You know, it's a lot of different questions. Dusty, do you do protective puts? That's called cash secured puts, CSP. Yes, I do, but I don't. And callers. Yeah, no, I don't do callers. Too much effort. So Dusty, what you're learning is a trading strategy I created for my 9-year-old daughter. So my own 9-year-old daughter says to me one night, Daddy, what are you doing? Can you teach me? So Dusty, most adults don't know how to trade the stocks. So I'm supposed to teach a 9-year-old. So it's simple, safe, predictable, consistent, no way for her to lose. So callers, no. Cash secured puts, no. Covered calls is the simplest and easiest, or dividend capturing. That's what I taught my 9-year-old. Simple, safe, predictable. What else do we have here? Terry, check with me tomorrow because we're almost done for the night. I'm just going to answer questions. But APLD is a yes. OKLO is a no. That much I already know. JL, what's happening? Maldonado Sato Detail. Oh, Mondato's Auto Detail. Oh, okay, cool. It's all one letter. Thanks, man. I really learned a lot. You got it, Len. Frank, I'm new to investing. Yeah, Frank, drop your number. I'll give you a buzz. Either send it here or go to the website and create a book a call. Bro, is this even the chat he's seeing? Absolutely, Frank. Daniel, SCHD, no. Vizzini, hey, it's Vizzini. Colin, he's exposure maxing. Thank you, Colin. I feel unseen. I'm sorry about that, Frank. Daniel, SCHD, no. Brother, check the dividends. See how consistently profitable SCHD is. And you'll probably run for it just like I did. I see you, Frank. Way to go, Enza. What's the best dividend stock? Are you ready? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, anything on Warren's list. Okay, Trap at 24, SPX. We'll take a look at it tomorrow. Colin, we already said no to SoFi. Bullish on Microsoft. Good for you. Simon, do Intel. We'll have to do it tomorrow. It's 11 o'clock. I'm done at 11, so let me finish up with these questions. Daniel, thank you for that, Daniel. That was nice of you. Daniel E. TJX. Ooh, that's on my list. Okay, Daniel E., I thank you for what you sent. That was great, awesome, but I'm going to say no to SCHD, brother. Terribly sorry. Take a look at the profits. Go right here to Yahoo Finance. SCHD. You put in SCHD and you take a look. How consistently profitable has SCHD been? Simon Barr, Energy Transfer? Hell no. This is why I say no to Energy Transfer. It's got nothing whatsoever to do with the stock or the company. Nothing at all. Okay? 2 cents, 0, 0. Okay? Certain stocks have crappy option premiums. You get stuck with them, you get nothing. Energy Transfer is one of them. I don't do. Simon, is this a recording? Now, Simon, how can I answer the question, is this a recording, if it's a recording? Time to delete. I don't like Charles Schwab. I wish they have never bought TD Ameritrade. I'm with you, brother. I really am. I loved TD Ameritrade. Michael Kelly, what about Walmart? We'll take a look at it tomorrow. I'm just finishing answering questions tonight. We're not looking at anything else. Running Gold, Florida Chili. Yes, it is. Disney is too woe. Cousin Astra, I hear you, brother. Ernst, Mythos Trade. Ernst Mythos Trade. Okay, interesting name. Too high. All right. Simone is in the house. We just did Simone. We just did Macy's a little while ago. STLA. Mayhem Maidens. We'll take a look at tomorrow. Yvonne, what ticker are you looking at? That's Energy Transfer at the moment. Any thoughts on UNH? Damien, we did UNH earlier. Dr. Corey, thanks again. You're welcome. Oh, Terry, I'm in HIMS myself. Damien, GLD, I'm going to say no, only because I don't do monthlies. Michael Kelly, I tuned in late tonight. I'm here every night, Michael, 9 p.m. Eastern Standard Time. Jennifer, do you hold the option until they expire? It depends. It's always, what did I buy? What did I sell? Where is it at now? Where is it going? What should I do? Those are the same questions I ask every single day. What did I buy? What did I sell? Where is it at now? Where does it look like it's going? What should I do? All right, Jennifer, those 5 questions I ask all the time. That's kind of like when you wake up in the morning. Oh, it's sunny out. What should I wear? Oh, I wore that yesterday. What should I wear? You know, it's the same thing. It's like, what did I buy? What did I sell? Where's it at? Where's it going? It's just another thought process in the morning. Bully wants to take a look at Kimberly Clark. Okay, we'll have to take a look at it tomorrow. Sorry, I missed you with John Deere recently. What do you think? I love John Deere. Doctor in Iowa. I do. I love John Deere. Cause and Astra, CCCX. We'll take a look at it tomorrow. What happened to CVS? Don't know. We'll take a look at it tomorrow. Conagra Gene. I have been watching you, but I really don't understand the strategy. Okay. How do you decide on the expiration date? This Friday. Okay. If it's Monday or Tuesday, it's this Friday. Wednesday to Friday, it's next Friday. Okay. And it's always going to be a numbers game. What am I buying it for? What am I selling? What's my rate of return? Great. That doesn't look good enough. Today's Wednesday. So I would actually look at next week's numbers also and ask myself the same question. Do I like this company? Do I like this company at this price? Do I feel safe putting my money into this company? Then I'd buy it and I'd turn around and I'd sell it for almost the exact same price. Because I'm not looking to get remarried to a stock. I'm looking for cash flow. So you're always going to ask the question backwards. What do I want out of this endeavor? Okay, I want consistent, predictable, weekly cash flow. That's what I want. Safety, consistency, predictability are my criteria. Okay? So I work the equation backwards. What is the simplest, safest trade that I can do that's also consistent and predictable? And that's just a covered call when the stock's in the move to the upside. Jackson's Jiggers. Look at the liquidity sweep on Oracle chart today. We'll have to take a look at it tomorrow. Alexander, can you do one-step covered call on Robinhood? We'll have to do that tomorrow, dude. Sorry, we're past 11. Thank you, Gabe. Any tutorial that you can recommend? There's one book I would recommend. That's Wade Cook's Wall Street Money Machine. Conagra Gene, EPD, tomorrow. Nanosphere, Cracker Barrel, tomorrow. Do you recommend fractional software? Absolutely. Wavelength, tomorrow. Doctor in Iowa, thank you, sir. I learned a lot watching tonight. Well, you should be here more often then. How long is too long for a covered call? Len, that is a personal question. Okay, I do every single week. You can do every 2 weeks, 3 weeks, you can do 6 months, you can do a year if you want. You can buy the stock now and sell somebody the option to buy it from you a year out if you want. It's all a personal preference. All right, down here, to the nines. You ever use TD sequential? Helps identify tops and bottoms when paired with stochastics, RSI, and MACDs. Ooh, that's a mouthful. Look at it this way. The trading strategy that I'm giving you for free, no strings attached, was created specifically for a 9-year-old little girl. 9-year-old little girl. Simple, safe, predictable, consistent, no way for her to lose. Never buy something you don't want to hold on to long term. Never sell at a loss. Make sure the company's consistently profitable. Weekly options only, and make sure the numbers work. Simplicity. Complexity only satisfies the ego. Simplicity takes a little bit more discipline because it's so easy, people want to complicate it. It's either going up or it's going down. There's no two ways around it. Okay? Either it makes sense or it doesn't. Either you like the company or you don't. Don't make it more complicated than it needs to be. What are the questions we got? All right. Carmen, Merck, tomorrow. Please explain SMCs. Isn't that Taiwan Semiconductors? Is that right? SMC? No. Summit Midstream. Hell no. Sorry, SMC's a no. TMRC, never even heard of it. TMRC. Texas Mineral Reserves. No options, no thank you. And it was less than $1. Hell no. Gary, hi to you. Dyson. All right, we did that one. Good evening. Thoughts on UPS for dividends? Okay. AGNC, hell no. Well, wait a minute. What is AGNC? AGNC. No. No. Who came up with that wavelength? AGNC. Look at that. 0, 0, 0. No, it's in the group of no, thank you. The premiums are horrible. Got nothing to do with the company. Okay, it could be a great company, but the premiums are horrible. Liquidity, DB. Most of the stocks I look at are dividend kings, dividend aristocrats, so it's not a liquidity issue. Okay, I don't trade thinly traded stocks because thinly traded stocks don't have 20 years of profits. All right. When you're looking at the dividend kings, do you set the price alerts in order to pick the stock? No. I look at when they're paying their dividend. Because when they're paying their dividend, the stock has a tendency to go up just before the dividend. Thank you, sir. You're welcome. What about Nike? Ooh, take a look at tomorrow. Can you set up Thinkorswim to get that view that you have? Absolutely. SoFi or Netflix. Now, I bought some Netflix the other day. SoFi, I won't buy them because they don't have any dividends and they're not something I want. Okay, they don't have enough customers. Okay, Netflix has a ton of customers. Can you flip the camera? Everything's backwards. Yes, I'm aware of that. It's a YouTube thing. What do you think about the shoe brand On? Never heard of it. Silver Miners. Take a look tomorrow. Tomorrow. TF is the third one. Tomorrow. If they knew what you were looking for, they wouldn't post dumb shit. Eric, I'm going to agree with you. That's why I get the sign up top, and that's why I say what I'm looking for every day at the very beginning. I'm looking for companies that are consistently profitable, at least 2 decades of profits, and weekly options. Okay? I can tell what I'm looking for, but people still ask questions because they're curious. Can you do one step in Robinhood? No. Unfortunately, Robinhood, it's a 2 or 3 step process. Because Robinhood, you got to buy the stock first, and then you sell the options. He hasn't read this feed, Eric. Yes, I do. I get more feeds to read. There must be other feeds. Does anybody know others? TikTok, YouTube, Zoom. Oh, what's that one right there? Right there. Instagram and Twitter. Okay, there's 3. We're not streaming on 3 of them tonight because we got a new computer today. Because remember, we were having computer issues last night. I don't think it's a computer issue because we're having a computer issue tonight. I think it's the website. Tony Kroger, we'll take a look at tomorrow. Microsoft has earnings tomorrow. Okay. Antonio Pascucci, how are you? Terry, so you're saying you cannot do this strategy on Robin? That's not what I said, Terry. I said Robinhood, it's a 2-step process. You got to buy the stock first, and then you sell the option. I get plenty of money every week from Robinhood. I buy the stock, I sell the option. And on Fridays, I roll it into the next week and pick up money that way. Do you know who Russell is, who made the fractional software? Nope, I do not. Sorry, G. Meta, 2 up over 10%. Okay, Eric Hall. Meta only has 3 years of dividends. So that means tracking their profitability is relatively quick. 3 years, that's it. Terry, thank you. Good to hear. All right. Next. Green Dean, how are you? What is that called? Antonio Pascucci. I have no idea. What are we looking at? When you do both at once, call it. When you do both at once, it's called buying a covered call. That's when you buy the stock, sell the option. How can we buy the shares of stock? Okay, Chi Brandon, you have to pick a trading platform. Okay, what you're looking at is a trading platform called Thinkorswim. It's owned by Charles Schwab. So you got to go and find a trading platform that you like. Okay, Thinkorswim. I was going to say TD Ameritrade, but they're no longer around. E-Trade, Robinhood, Acorn, Webull, whatever you want, Fidelity, whatever you want to trade on. But that's the first step, is picking what trading platform you want to use. It's just one step, same thing. Not on Robinhood, it's not. Robinhood's a 2-step process. Calls all booked for January. That's funny because I only had one call today. Okay, so they're not all booked because I get, you can DM me at, actually, you're here on YouTube. You can actually send me a message here on YouTube with that. Gee, how long does it take to get good enough to be consistently profitable? Okay, gee, it took my 9-year-old daughter 15 minutes to understand the whole thing. 15 minutes, that's it. Okay, number one, you find a set of stocks you like. Number two, you throw them into the calendar. Number three, you check when are they paying their dividend because you want to buy it just before the dividend. Okay, buy the call, sell the option. Buy time to delete. I don't know how you put up with the dumb shit. People want to buy at the high and ask about monthly. Time to delete. Thank you. That I take that as a compliment. But gee, this is your first time here, or it's the first time you're interacting, I should say. Okay, so I'm pretty good with names. When somebody stops by on a consistent basis, I know they've been here for a long while or not. Okay. Remax, what is the relevance of the EX dividend date? Uh-oh, 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 somebody asked. Here it comes. What is the relevance of the EX date? All righty. Who asked that one? Remax. Remax, I'm going to assume you're a real estate person. I just love real estate people because they think a cash producing asset is a house. And that gives you a monthly return. And that monthly return, they look for a 7 to 8% year-over-year return. Yeah, I look for 1% a week. That's over 50% per year. But let me show you. What's the relevance of the EX date? There are 4 dates to think about when you're talking about dividend stocks. Date number 1 is the announcement date. That's when the company comes out and tells you exactly what they made for a profit and exactly how you're going to get yours. Date number 2 is the EX dividend date. That is the last day the stock trades before the dividend is paid. That is the day you need to buy the stock if you want to collect the dividend. You're going to buy it before the little green dot. The little green dots all represents companies that have been paying dividends and are going to be paying dividends. Today is the 27th. CAG, CRS, GBX, and MCB, these 4 companies are paying a dividend as of today. So the EX date, the last day the stock trades. So if you want to buy the stock and collect the dividend, you got to do it before the little green dot. Date number 3 is the date of record. Whoever owns the stock on the date of record is entitled to the dividend. Date number 4, the payment date. That's when you actually get your money. The relevance of the EX dividend date. If you want to collect the dividend, the EX dividend date represents the very last day you could buy the stock before the dividend is paid. Okay? How's the NAV erosion? Net asset value. It depends on what we're looking at. All right, what do we have down here? Just jumped in. Did he just explain a different thing? He usually only buys the stock and then sells the call, but he said buy the call and sell the call. I'm confused. All right. When you buy a call and sell a call, that's a spread. But we're talking about covered calls. Depending on how you approach it, it always comes out to the very same thing, but how you approach it is different. So buying a covered call in one trade, you buy the stock, sell the option, all in one swoop, so you know exactly what your rate of return is going to be that way. Or you can buy the stock first, then sell the call option. It's the same thing, buying the stock, selling the option, but one trade or 2 separate trades. Eric. He was explaining the difference of selling and buying options. Okay, thanks. Antonio, buy a covered call, you buy the stock and sell the call, okay, same times. Yep. I get with AAP. Thanks for showing us how it's done. You're welcome. Up, downs all night. Okay. 9-year-old daughter is like 39 by now. Jesus, you know what I got to say to you, Adrian? Seriously? You think my 9-year-old daughter's 39? You think that? What? Wait a minute. I ain't that old. Dude, my daughter, what, in 2008, she was 9. Now she's 26. Thank you very much. Not 39. How old do you think I am? Okay. Hey, this dude has put so many people onto his strategy. It's securing options liquidity. No, 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 no. Okay, that works. UNH. Eric, good. It is a solid strategy. Thank you. Remax, thanks. But does the EX dividend date affect your decision to sell covered calls? No. Well, wait a minute. It kind of does because it tells me when to buy the stock. Okay, hold on a second. There. What are we doing? All right, this is a little easier. Okay, Remax. Today's the 27th. Okay, tomorrow's the 28th. Then the 29th and the 30th. So let's say hypothetically I want to collect the dividend for FAST. If I want to collect that dividend, I got to buy it before the 29th, which means tomorrow, the 21st, the 15th, the 8th, the 1st, the 30th, the 12th, the 13th, any day before that date, if I want to collect the dividend. That's all that means. Okay, but my trading is always structural. A, B, C, 1, 2, 3. It's always the same. It's always the exact same approach. Ted, in general, option premiums get pumped up day before earnings announcement, correct? Not necessarily so. They only do that when they think something's going to go on. They try to entice you to buy the stock. That's why they pump up the premiums. What else do we have down here? I've been watching for 2 years, amazing strategy. Well, you've been watching for 2 years? Holy cow. Good for you. Antonio, watching 2 years. Have you practiced as he preaches? Okay. Absolutely. It's the only thing that works for me. Honestly, I've tried a lot, and I have peers in the market and doing their down times. I'm solid. Dude, it's about time I hear some good news from you. Good for you. I can say I have watched and definitely see his 1 to 3% is definitely doable. All right, Eric, thank you. Anytime I strayed from this strategy thinking I could try this and that, I've always regretted it for the most part. If it were, Eric, was that Eric? No, that was Antonio. Antonio, listen closely for a second. Antonio, come here. Antonio, if it's not broke, don't try to fix it. Okay? If it ain't broke, don't fix it. If it works, fine. Do not stray off the path. All right, what else we got? I just wonder why he tells us so much on these streams. He does. How does he make money? Okay, see, you're under the impression that I'm doing this as a favor to you. No, I'm creating a video diary for my children and my grandchildren. So 20, 30 years from now, when I'm all gone, they will have the answer because they are not going to get access to any of the money that I leave behind unless they can prove to the, wait a minute, it's not the curator, who is it? The one in charge of the trust? The trustee. If they get it, they have to prove to the trustee they know what to do with the money before the trustee is allowed to give them any of the money. So I'm starting blurting out all my knowledge so that my children and grandchildren will have something to go by. Say, wait a minute, Papa G left all this money. How do we get it? Well, they go to the trustee, and the trustee says, well, you got to learn how to invest, and you only get to spend a portion of the profits that you make. So I'm being a dick to my children, my grandchildren, and my great-grandchildren. That's what I'm doing. Okay, so when I pass, everything I accumulate is going to be into a little trust, and the only way they're going to get access to it is to prove to the executor of the estate that they know how to invest money properly. Does that make sense? Okay, I got it. Only if you want dividends, selling the covered call is separate decision process. Absolutely. Executive, thank you, Lemonade. Sounds like you'll make the trustee rich. Well, you know what? It is what it is. Okay? Okay, so I'm not expecting anything from my parents. Okay, but I am expecting to leave a very large chunk to my children and my grandchildren, my great-grandchildren. So yeah, all the videos. You're going to see me doing a lot of videos because I got a lot of information up here that I am trying to get out before I start losing my mind. My mother's in her 80s and it's not always 100% there. You know what I mean? Hi, did I pass my test? No, I failed spectacularly. But I'm going to take it again. I was only off by a couple of answers. So, 10 more answers and I would have passed. But it is what it is. But at least now I know, what's on the test. Because I'm not going to read that whole damn book because most of that book's not even on the test. So why would I bother reading the whole thing? Hey, Jay Moore. That's a good plan for the trust. Thank you. I've seen way too many people inherit a lot of money and then just gone. My niece won $15 million in a scratch off. And 2 years later, she's broke, working 40 hours a week because nobody ever taught anybody how to deal with large chunks of money or even small chunks of money. Let's keep on going. What else we got? Also, do you have a lot of time to watch charts? No. Antonio, when I say 10 minutes, okay, any video I ever do, you always say, hey, everybody, my name is James. This is Dividend Stock Talk brought to you by the 10-Minute Trader. It's a 10-minute trading strategy created for a 9-year-old. 10 minutes. That's it. Okay? What's on the list this week? Great. High, low, where is it? Where is it going? Do the numbers work? It's all A, B, C, 1, 2, 3. Just keep showing up, keep asking questions. I'm typically more long-term. Texas changed dramatically after 12 months. Okay. Oh, okay. Taxes. Yeah, I get that part. If you're concerned, Eric, if you're concerned about taxes, you really got to look into a tax strategist or a tax planner who can legally show you how to avoid taxes legally. Okay, Eric? Okay, Antonio, he has a small group he does in the mornings, but never promote it so it doesn't grow too big on him. All right, I'm going to agree with you, Antonio, okay, because I like to be personal and I like to be able to talk to people individually. And yes, I do have a paid morning group, and no, I'm not trying to sell anyone anything, okay? If you want to, we're all adults, we know how it works. Go to the website, sign up if you like. You get to watch over my shoulder, you get to ask questions. It's a walkthrough, okay? And you just keep showing up 5 days a week, every single week, okay? It's $100 a month. What's the big deal? $100 a month, you get to learn something. You can pass it along to your kids and your grandkids. Anyway, Jonathan, I see you. How's it going, Jonathan? How's your dad doing? He's not selling us anything. Absolutely, I'm not. All of these dividend aristocrats are solid companies. Sometimes I like to say the first thing that comes up in my head. Okay? So all the dividend aristocrats are solid companies. No shit. Think about it. Why would you invest in a company that's not solid? See, I'm 65. I don't have the, 62. I don't have the luxury of being wrong. What do I mean by that? Well, I've been working 5 decades. I retired 3 years ago. My first job was in 1974, Old Man Simmons Farm. So 5 decades I've been working. Now, can I keep working? Yeah, I could, but why do I have to? Why should I? If I can make enough money to satisfy all my bills. Holy cow, you guys got me up here 28 minutes late. If I can pay all my bills comfortably, why do I need more? Think about it. Why? Anyway, let's keep on going. Yeah, I just got to make sure that you got weeklies. A few of those lists are monthlies. Yep, correct. He likes the ones that pays week. No. I like the ones that have weekly options. Working is boring once you master the art of recognizing price action. Wavelength, I love that. That's awesome. Ian, you're absolutely right, because profits are better than wages. Time to delete. James, how do you screw up 15 million when 3% interest is a year is 450,000? Because if you give that kind of money to someone who's never had a full-time job, has 3 kids through 3 different guys, okay? State came in, took the kids away from her. Now, you give somebody like that 15 million, what's the first thing they're going to do? Go out and blow it. That's exactly what she did. She went out and blew all of it. What does she have left? Nothing. Anyway, she works a 40-hour-a-week job nowadays. You do realize that 15 million, that's 15 at 1%, that's $15,000 a week. That's $45,000 a month. How the hell do you blow all that? Wait a minute, 15, it's $60,000 a month. How do you blow all that money? Well, she did. You know, we live, we learn. All right, what do we got? 15 million Steve's dollar lingerie, new escort career. Oh, wavelength, that's terrible. I'm good with 3% a year. We learn. Yeah, we do. As far as when companies pay a dividends, he doesn't mind when it is. I meant that the calls he sells expire 1 week. Make sure that our stocks allow that. Some only do monthlies. Absolutely. Anyone know what platform he's reading? TikTok, Instagram? Oh, right now I'm reading yours. Okay, but you got to remember. Okay, I got 1, 2, 3, 4, 5, 6. 6 different screens that are asking questions. I'm done with that one, that one, that one, that one, that one. This is the only one left I got to answer. So I get to every single question. Sometimes it takes a while. He live streams on 8 accounts. He tries to read as many as possible. Thank you, Antonio. Here now. Okay, got that one. UNH, we saw you up. Yep. I want to hear that 9-year-old daughter never worked a day in her life. Oh, hell no. She did. Trust me. Because from 9 to 13, she was my shadow. And once she turned 13, if you have a little girl at home, you know what happens when girls turn into teenagers. Boys, dresses, clothes. Yeah, no. Sorry, daddy was the ATM devil. That's it. She was my shadow for the longest time, and when she turned to a teenager, you know what happens to girls then? She wanted nothing to do with me other than paying for everything. OMG, this is good info. All right, Adriano. The story about his trust and the kids reminds me of the movie I once saw. It's coming back to me. Yes, about 9:30. Okay, so that's it. I answered all the questions. You guys have a great day, and we're going to do this all over again tomorrow. Yay! You guys have a great night. We'll do this all again tomorrow. Guys, over here, see you tomorrow morning.
See you in the morning.
Alrighty. And now the end is near, and so I face the final curtain, my friend.